Man, I got no warnings today from is because the recording paused or are we live?
Should be live.
Should be live. Holy smokes. Market Vitals, the stream, HFR, Mistrade, Matt Davio. I got to tell you, Matt, I told you in pre-production, I'm struggling here as we got my friend in the wood chipper out front taking care of bodies right now.
Bob's in the issue of, he's in Fargo, apparently.
I got Joe Biden ears today. I can't hear shit because of the noise. What's cool is I have this Samsung G-Track Pro microphone, and what it does is it only takes the sound coming at it on the setting that I have it on. Therefore, you can't even hear the wood chipper in the background.
No, we can't hear a thing. We can't hear a thing.
No, your ears are omnidirectional. Like you hear from all over. The Samsung G-Track Pro microphone, highly recommended. Not a sponsor, Matt. Not a sponsor. All right, Matt. It's Easter Monday. Had a little rip on the opening, but fairly quiet in the trading land.
Yeah, we're right where we opened on this NASDAQ 850. That's where we opened. We're at 850 again. We've been around it. We went above it. We went below it. We went above it. We went below it. Now we're right at it again. I don't know why they don't just make Easter Monday, make it a full 4-day holiday, because he is risen.
All right, man, let me show you a chart. And this was shared by the curmudgeon himself, Dave Collum, a professor, seemingly somebody that knows facts. What's interesting about it is I get to show you this, and I got to shrink myself so I can actually get in the chart, man. We like to be in the chart here, and we're tracking COVID deaths here from Stats Canada in New Brunswick. And as you can see, as I move in the chart and along the chart here, relatively stable. I mean, not a lot of people dying in New Brunswick, under 100. I mean, a little blip here, a little over 100, 65 to 85-year-olds, and still like just under 100. I mean, this is through COVID, through the first jab, the second jab, the third jab, the booster, the Trudeau trucking lockdown, all of this. And then all of a sudden, what is going on? I mean, Dave says I'll just leave it here, but I think sometimes visual. What is going on? That's the question, Matt. What's going on? Do you know?
People are dying. I think they're, they're eating more Twinkies, drinking more beer, I guess, dying. What do you do in New Brunswick? Oh, they took 3 jabs. They were forced to take jabs.
It's the Molson Canadian. I'm telling you right now.
It's the beer store killing them.
It's the beer store, eh?
I'll just leave it right there because I've been canceled again, as we know already, for another week. So fuck all these people.
Matt is super curmudgeon-y. And not like him. He's usually very light at this time of year, as the Easter holiday is so important. I know it to him. But man, listen, there are some incredible things going on in pricing. And let's start with nat gas, because you talked about how explosive this was. It actually put an 8 handle in front of it, an 8 in front of it, $8 plus. I think it's backed off a little bit. But as we work through some of these things,
look at this.
Smokes.
Look at this. This spike feels blow off-ish because we went from 740 over the weekend to 8 all of a sudden today, and you see that again. But Europe is a mess, Bob. I mean, we were, Sunday we spiked to 750, and then as soon as the markets opened, U.S. 5 a.m. here on the West Coast, boom, another 50 cents that blew the top off. It ran all the stops. Feels like to me. Feels like we're near a near-term retrace is coming. This was what I was waiting for, quite honestly, was a move like this. And when you see a daily RSI around 90, especially for a commodity, sold.
And obviously it's highly leveraged, and you have to know what you're doing. As we talk about in our risk segment, risk is yours. You better know what the risk is, because in that leveraged environment, the old margin call, we used to call them the margin Nazi. Like if you have a position and you don't have the margin or the money in your account, you got to refund it, or they take you out of the position themselves. So very important to know that.
Now, again, we talked about this before. It's been as high as, 18, $16. So maybe we're only halfway there. And that's, quite honestly, it's very probable, very possible that may be the case. But right now it just feels like on the daily chart that it, blows off. But kind of like we were, the same thing that we were seeing when the NASDAQ had the 11 days in a row, up every day. We continue to not take out yesterday's lows, which at this point, yesterday's lows is about 695. It's $1 below where we are. So it's hard, it's hard to be super bearish until like you see some signs. Now, tomorrow that low becomes 740. That becomes more in play, right? So as time goes on, again, it seems like we blow up almost every day. We go higher. We have been. I mean, let's look at a short-term chart. We go higher pretty much every day. We've been riding this train high in cocaine, on NASDAQ. And I mean, just a month ago, we were down here at 4s. We had 4 handles. So in a month, 100% gain, basically 100% gain. Yeah, it can keep going, but it just feels like we need to take a break.
Casey Jones. Thank you, Lee. Casey Jones, you better watch your speed.
That's right.
Let's look at a few other things, Matt, that we have been calling for higher and continue to do so. Let's look at the dollar again.
Dollar broken record, but again, with the bonds making a new low today, the dollar also making a new high. As we said, as long as that continues to happen, we will. Now the high today is 100, almost, was it 85? So 85 is the new high in the dollar. And I said, we're going to 103. So that was the most recent high that we saw, COVID, right? The March COVID high in the dollar was 103. So let's get back to that. We'll talk about that again. 103.80. We're whatever. We're like $3 away from that. We got plenty of room to go. And you start to see this bracket. This bracket is really interesting, isn't it, Bob?
It sure is. And it's crystal clear.
It was the reason why we were buying down here in 21. And it's the reason why, we're going to go test this top again. And it's just a huge bracket that goes back to 2014s. So this is now 8 years of time, and it's working itself. And again, you're looking at, let's say, 89 to 104. So that's a $15 range. The next $15, Bob, will come above or below that bracket. It's as simple as that.
Right on. Hey, Matt, Lee just chimed in about the yen. The yen, pull up the yen dollar, because the yen is really on fire versus the dollar. And I'm wondering, with all the strife in the world, if people aren't looking at Japan as maybe a safer haven. China continues to amaze, locking down. I mean, the videos coming out are just horrifying. Did you see the chart of the container ship back up now in the China Sea?
Yeah, Shanghai is the busiest port. So, I mean, to me, this is just another move this is what we've been in war, and the war is getting worse, and people are more asleep than ever.
It's crazy to me that
and the yen's on new lows also. So, this is just the futures contract on the continuous. So, which would line up with what we're seeing, what you're saying.
So I was looking at the flip side of that, the cash.
No, when the dollar's going higher, the yen's going lower. So
right on.
Yeah.
And that seems to already be, you talked about that dollar being 103, the bracket. This looks like it's already hit its bracket low.
It's on the lows, right.
And if that's a leading indicator on which way this next $15 bracket in the DXY is going to be, we'll see how this thing reacts against this level. But for sure, a spot that it hasn't seen in 7 years now, all the way back to that 2015 area.
Yeah, just like, I mean, again, it's just it's the same. I mean, again, we're looking at the same thing. This is why, I kind of sniff, I shake my head because we're doing the same thing, but it's a good exercise for people to see. And again, the dollar is at, it's the reverse. It's up at the high. It's running up to here. So it will run up here. And again, the next $15 comes on a break, on a weekly break, on a monthly break, right? We talk about those things all the time. So I'm not just talking to tick over and come back in. That's not when you get long. Give me a couple.
We've seen that a lot, especially in this type of scenario, these longer term bracketologies where you can get a throw over or a throw under, but it's got to sustain time and volume for it to get interesting. And a lot of people make that mistake of just buying the first breakout.
And again, this is still a very bullish chart. Taking all that aside, we're above the point of control. We're above all this volume down here. So everybody that's bearish the dollar, this is not a good time to be bearish the dollar. When it breaks here, then you can really go pile in bearish the dollar. Until then, you want to, right now, you want to be on the long side. I mean, for sure, it's just going up. So, and it has been for, the good part of a year and a half. So this is not new. We've been going up. And again, the monkeys at the wheel continue to fight the trend, which is up in the dollar. And again, driven by interest rates, driven by what's going on in the, in the geopolitical space, all kinds of things it's driven by. The market doesn't do what you want. It does what it does. And the bonds and the bonds here. And again, I'll bring up a long-term chart again on the bonds. New lows today at 140.01, almost into the 130 handles that we've been talking about for a long time. And by the way, solidly staying under the trend line, which we talked about a while ago.
Like we talk about this. All right. So now we have, I don't know how many days of action we have underneath that trend line, but it is for sure respecting it, right? It's building time and volume underneath it.
I think it's probably multiple weeks now, if we were to hone in a little bit. I think last week was the first week, and we're starting to see the second week, possibly third week. This is the third week. So 2 weeks we've closed underneath the trend line, 1, 2, and now 3. So if you were looking for a place to get back in, it would be, again, a rally back to the trend line, and that would be a sell again if you've been missing this entire 50-point run. But again, to me, Bob, 112, why can't we go to 112, right? That's still the big picture. If you're looking, you're in value now on a weekly chart, right? You're in the value zone. And as you said, 80% of that value, let's call it, 151 down here to 100. 80% of that's $40. So why wouldn't we hit 111? And guess what? 111 is the point of control too. So.
I love it when multiple methodologies line up and point to the same level, right? We call that synergy in trading.
Yeah.
We used to have a little synergy blog.
Now that being said, we are way oversold, way oversold in the bonds, but we continue to go lower. So again, I'm not saying we're going to bounce, but we're definitely due for a bounce. We're definitely due for a bounce. And maybe the Fed cuts in a day and, or raises. Maybe that's the reason to rally, because they finally cut rates hard again. Who knows? We'll know when it happens. But right now, it's just sitting there holding 140. I wouldn't say strongly holding 140. So it's
all right, man.
You've had the even number of people buying yesterday and today, Bob, at 140. That's all it is, right? It's the even number. Bingo. Will it last? I don't know. We'll see.
All right. The grains again, also, so all of these things, these inputs, like how is inflation even more so? How is it transitory? I know we've thrown that out the window, but you see the continued spike in all of these things. And you're like, man, this is getting serious. At some point, it's getting serious when people can't afford to fill.
And obviously we're coming out of winter, so natural gas, but for the retail is not that important today. But there's plenty of businesses that are being crushed from a natural gas perspective, used in manufacturing, et cetera, right? And then you look at the whole China thing. To me, that's, like I said, it's just another step in the war. I was reading, somebody was writing an article this weekend about how the US and Western Europe are basically 80% service economies. So if you don't think China, whether or not COVID is real or not, and what's going on over there, they are using it to clamp down on the supply issues that this country is already having further. And guess what? This is the thing. Like, this is the interesting thing to me, Bob, and I'd like to get your take on it. They don't teach you in macroeconomics that, they teach you interest rates go down and, equity markets go up, right? In that situation, when the bonds are going up, equity markets go up in theory. But what they don't teach you is when inflation is spiraling out of control because of a pandemic, and now your inflation is spiraling because you printed all this money to pay people to really put a Band-Aid on a gusher. I talked to a guy today that owns a painting company, right? And listen to the story. He owns a painting company. He's looking to get one of his trucks wrapped for advertising. What do you think that costs to wrap a car? Like, in your mind, what's that?
$4,200.
Wow. See, I would have guessed, to me, 2,000 would have been like through the roof, and 1,500 is kind of like what I'd be willing to pay. This guy said he got quotes anywhere from 3,500 to 5,500
for your advertising model. seems like the Fisher Price paint set's going to be a better option.
Yeah. So anyways, inflation is hitting the local guy, and on the same side, he can't hire people because they still are telling him today, Bob, that they make more money staying unemployed.
Welcome to the great state. All right, Matt, I don't know what else to look at here on an Easter Monday. But anything else jumping out at you market wise?
Not really. I mean, again, we're, earnings gets going again this week, and we'll have that the next few weeks. We'll know a lot more. Wheat's up, wheat's up 3.5% today. But again, I was just showing that chart. It's really not that, it's not going crazy yet. It's not like natural gas.
Not yet, but it is, again, Matt, the same as, is building, and it's basing above that longer term value area. That is bullish.
Yeah,
that is just sitting above there.
Again, I think the next move comes again when it goes back above 1171, which isn't far away. So that could happen. Yeah, beans are still hanging. They never really fell down. They're here at 17. They fell down a little bit, but again, that 15.5 area continues to hold. All the indices are running wild again. It feels super thin today. There's no. Today, just stay away if you can. It's just a thin day. It's like it might as well be a holiday trade.
All right, man. $8 corn, soon to be $11 wheat, beans in the 20s. It's here. You know what? Let me do some teaching here, because I got another hog spread that I pay attention to, and it's a little early yet right now on it, but I want to just tease your mind on it. And I'll share this. And as we roll through the summer, and as these roll cycles happen, the spread I'm highlighting here is the Dees of 22 versus the Feb of 23. And so we're basically going from that generally cheapest price on the board, Dees hogs, and as you come out into the new year, kills go down and the price of hogs go up. It's twofold. Kills go down, demand starts to increase. Anyway, the metric or the driving force of this spread is the simple roll cycle. And when you get Dees anywhere near, you've seen it already went there once, anywhere near $1.50 to $1 under the Feb, you want to be selling Dees, buying Feb, because as this roll cycle works its way through, generally this spread can go out to $6, $8. And it's a function of the roll. It's a function of the funds are always, primarily weighted towards the front contract. And so if they're bullish, they'll keep rolling out those front contracts. And when that in the middle of the summer, when you get the August Oct Dees, those rolls starting to really take place. If this spread comes into anywhere between, call it $2 and even money, you really want to be paying attention and selling D's, buying Feb at 23. It's early right now on this cycle, especially if we get and from, my friends in the hog space talking about how explosive these fall and winter hogs are going to get, simply because the herd just isn't there. So you might even get this one to even money coming through in the summer, D's even with Feb, based on that roll cycle. Anyway, I wanted to point it out because we will keep coming back to this. And that, as traders, when you have trade ideas, that's what you do. You put it on your radar, you start looking at it, and you wait for a proper time to engage. And then you manage your risk like we always do, Matt.
And, also what we do, Bob, is we like to bring up good ideas for people that are having problems in their neighborhood. Fuck Nextdoor, fuck Facebook. Just for giggles, this is what I have been doing in my neighbor because people have been ripping off our Amazon deliveries. So just for giggles, I replaced my cat litter box with an Amazon box. Now when it's full, I simply tape it up and shut it and put it on my front porch for someone to steal.
Oh, do I love that. Here's a nice.
So we're here to help you with fresh ideas always at Market Vitals. And by the way, 3 boxes have been taken already. This works great. It works great.
Really. 3 boxes. That
plus,
awesome.
golden retrievers, they shit a lot. They're big dogs.
All right, we got a runner here. We got a runner on the spoos, running back to the highs. Yep. I don't see why we wouldn't go test. My daily momentum level is 44.19 for all you people playing momentum. Daily level in the spoos, 44.19. I wouldn't be surprised if they go sniff that out. They should reject it. And if they don't, maybe we get a little a pullback from the pullback as we move forward through the week, Matt.
Anything's possible, Bob. Anything is possible in this weird world. Yeah, I mean, again, I felt like that 800 level was a good buying area on the NASDAQ, and it's 930 right now. So there you go. Bingo, bingo, bingo. Just a shit kicking inside new low, but inside day. And why wouldn't we go a little higher here again?
All right, Matt. Thank you so much. Please visit us, marketvitals.io. Please share, retweet, plagiarize the broadcast. And we'll be back tomorrow for another live segment. Market Vitals. Thank you, Matt. Thank you, Lee.